Hi Ron, it's Stuart here again. Hope you are well. It's Friday. It's at the end of the month. It's raining quite heavily outside my window here. Um, but there you go. That's October for you, October the 3rd. So we're going to do some live trading, some live positions on this. The couple of strategies that we're currently using, thanks to TradeLock. It's only let me hold two of them at the moment, and it's not letting me put lots of lines on here. So anyway, those of you that are new, this is the Bollinger Band and the stochastic crossing strategy. As you can see here on the 5-minute chart, this is the Nasdaq we're looking at the moment. We're short, or it's been short. It's triggered long. It's turned long here at 1350. So there would have been an open position here if we were trading this live. There would be an open position from there. Oh dear, it may come on. Open position from here at this point here. Stop loss would have been down here below, sort of halfway down those wicks, around about there. So it's control J, isn't it? No, it's what's that? It's Alt J, isn't it? Alt J horizontal. I'm sorry. Stop loss round about down here initially. It's moved up. We got within a smidge of the first target, which is the midpoint of the Bollinger Band. It's not having a go at that at the moment, but obviously we've got the volatility of the opening session, so we need to be a bit careful. So literally coming up in the next 5 minutes. So let's just keep our stop loss around about here. So we're not going to lose too much of this. Obviously, the volatility of the open causes more aggravation, but we'll hold it through the open. We'll see the experience of the open. See how the volume picks up. How we could spike up quite strongly. It could spike down quite strongly. We get stopped out in the for the favor of the actual excitement. So of the move and the volumes coming in. Also, yesterday we were positive again into close 6,715. The S&P closed yesterday. Nasdaq was up 0.4 of 1%, 0.39 of 1%. We come down here. It's in the 5-minute time frame. Click up to the hourly chart. Might lose my eyes. We've been down this morning from the pre-market high here at 24,900. Our pre-market low was down here this morning at 24,864. So 24,986. 24,864 is the low. So as you can see, the last 3 hours have been quite positively negative, if you like. There's the last cross. Actually, it hasn't actually touched the outside the Bollinger Band, so that's still that hadn't triggered. It had been long here. This one. In fact, it hadn't triggered there either because it'd been like that. It'd been on the outside, so that's not working in that hourly time because it hasn't touched. There's no trades open on that hourly time frame. But as you can see, we've had a strong day, or we've had a strong week this week with 6 consecutive days to the upside, and currently down for the last 3 hours, but ticking longer as we saw there on our 5-minute time frame. There we are. So there we go. We've hit our target 1, so that would have been our entry target. Half the profit would have been taken off here. First time in the upper half of the Bollinger Band since 1125. So what can I say? This strategy's worked quite nicely. We'll see where we're looking now for the stocks. So the stochastics to turn and cross again. So to perhaps, but we know as you see, as we've come down and then bounced up, the Bollinger Band has come down from the top. It's come up from the bottom. So this could be a squeeze that's forming. So we could see an explosive move. So we could see some further buying here. But what the stochastics are suggesting to us is that we're getting a bit toppy on the stochastic. If you look at the stochastic setup there. So we would have closed half of our profit from this 13.15 point. The stop loss now would be at entry for the second half of the trade. So we would have got our trade closed there. So it's a great demonstration of this little strategy. I'll do another. I know it's Alt J, wasn't it? So that's our entry, the first blue line, second blue line's there. So got out 24,920. having got in at 29. Oops. 29, sorry, 24.911. So 9 or 10 points there on the Nasdaq in the 5 minutes. But off we go, and in the money and off and running. So we'll come back to that in a minute. Our stocks, we can't lose on the second half of the trade because we've got our stop loss at our entry point. Elsewhere, the Dow might have done a similar sort of pattern. In fact, it hasn't yet, has it? It's touched the outside of the Bollinger Band here. It's for the first time here. So we're looking for a cross. It's flattened. And again, another one. It's moved. It didn't actually move there, so it would have been here. So you would have got a long position on the with the Dow. Remember, all these things are different. On this strategy at this time there, literally 10 minutes before the open. It's the 5 minute on the Dow this time, guys. So that's gone long there. Stop loss below the low down here somewhere at the moment. And interesting, I think that was the pre-market low where I'd put in earlier here at 13.35. In fact, the pre-market low is the one where we've got in basically, haven't we? So that's the pre-market low. There's the pre-market high, which is basically just shy of all-time highs up here at 46,700 for the sake of a few points. We got 46,690. So, literally 7 points on the Dow, which is nothing, is it? When you're trading at 40,000. Look out, it's a nice tight spread as well on this key index. So that's gone. This one has gone long there. So Alt J gives us a long entry there. That blue. So that's change the color of that one. It's that blue. So it's blue for that blue for go. That's gone long. That would have gone long there. And the SPX will be a bit similar. I want to bother to look at all. Obviously, today the market's obviously just churning. Really, no non-farm payroll data today. It was expected at 52,000. Obviously, we had that big miss, the big contraction. That was the big news of the week. Was the fact that the ADP, the private payrolls data that did get reported, because it's a private company before the shutdown on Wednesday in the United States, reported a contraction, and also the previous month was also negative. So that's really, for me, was the key data of the week. We had that weak consumer confidence as well. So certainly some things happening in the within the labour market that many have been saying it for a while, but there we go. So the Dow's off and running as well now. The Nasdaq, I wonder if the Nasdaq's continue to move. There we are. So there's our first target. So let's drag our stop loss up now to target 1, so we can. We're definitely the second half of the trade and a touch of the outside of the Bollinger Band. Because of this tweak here, you can see that. See how that one moved in there, and that one's moved down as well. So it's not it's not a squeeze. Squeeze is key for some big explosive moves, and we sort of got that there, bit up there, bit down. So I might just leave that on. But there we go. I moved it too quickly. And we've reversed, and we're out completely. So both halves of the trade, and that's, again, as I say, about the risk of trading the open, my friends, having live positions in at the open. The volatility of the open has took us to our first target. We pulled our stop loss up to our target 1, and it's taken us out. So the whole position would be closed now at that point. So we've made literally 10 points on the Nasdaq there, from an entry at here at 24,911 to 24,920. May not seem like very much, but if you look at the ATR, that's a typical 5-minute move for the Nasdaq. You see where we got in here. The ATR at the time was about 11 points, and that's exactly what we got. So we've got a typical 5-minute move, and it was all to our good. There we go. We pulled this. We too. There we go. Classic example of being too aggressive with the stop loss. But I would now be looking to enter that. I would have entered again on this based on the squeeze in the the squeeze in the Bollinger Bands we've seen there. If we go down a tad, so it's 14:32. So if we look at the 2-minute trading, and there's the squeeze there. So I'll be in here at the close. Actually, it's not close. We're just into the 32. So this one hasn't closed. I'll be looking to buy this again on that move because that's looking like that. Yet to confirm. Obviously, could be could go anywhere, but the higher the day there, 24,986 look for on the Nasdaq. So a successful on there from that first cross here at 1350. We got a bit too keen to move our stop loss to our target too quickly. As we can do on the open, but if we'd moved it to entry, that might have still kept us in because it doesn't look like it's actually didn't get back to our entry point, did it? But certainly, if we'd left the stop loss where it was down here and not moved it as aggressively as we did on the excitement of the open, I was just trying to lock in profits basically, and that's what we did. So we got all of this as opposed to that bit and that bit. Obviously, we'd have got more if we just left the system to run as it appeared. Right then, so the squeeze that looked like it was forming here on the Bollinger Band isn't playing out here on the 5-minute. We obviously need to finish and wait for these candles to complete, but it's still biased to the upside. And as we said earlier, or just a few minutes ago, the K and the D line here, and you see on the stochastics, is sort of topping out here at 96.30. Remember, it's bounded the extremes we've got to here. You can see here 96.90. So it's looking like it may be running out of steam at this point, but we did rally to 954. So it's still good to go. And now, having touched the outside of this Bollinger Band, the upper Bollinger Band, now we're now looking to go short on the way this strategy works. So obviously, the volatility of the open, the trend could outstrip the mean reverting approach, and that's what this strategy is, a mean reverting approach. So we're going against. When we touch the outside of the Bollinger Bands, we're looking to look for a turn in the market once the stochastics cross as well. Our other strategy is much more of a trend following strategy. The VWAP and ATR and the Heikin Ashi candles. It's clearly trending. So here you can see the green positive strong trend here. Positive strong trend last night, right up until the European Open this morning, slowing down, and then we turned around. We had our first red candle at 11 o'clock my time, and it's here on the hourly time frame. The Nasdaq is strongly negative, like we saw on the hourly candles on the previous system. If we go back to the 5-minute, trying to use this strategy for the scalping, it's a bit more difficult simply because of the way the Heikin Ashi candles are created. But you can see here again, it's been short, bit mixed, and that there would have been the first strong candle there 10 minutes before the open to take us long. See, there's no wick to the south here on this one, so relatively big bodied candle. We'd been, there's the hourly candle. You see runners down, retrace, red. First green candle here is at 13.55, but then we get a red candle. It is a doji candle, but it's flipped it to red from green, so it's uncertainty. We then got a similar bodied candle to the first green candle, but also with a wick on it. The next one was a smaller body, but the wick was smaller to the downside. Then we get a doji, but wait, price is moving up, so it's looking quite positive, and that would have been the confirmation candle where there's no wick to get you in. You just stayed in here through the open, stop loss down here under the body of that candle. So this one is still in. Many people would have perhaps had the first target at the 50 period moving average. Oh, it's supposed to be the VWAP on this one. Oh, dear me, it keeps dropping off for some reason. So even though I anchored it, I didn't There we are. So again, many would trade the VWAP would have had that as a target area and see where we go back to. So interestingly, we're still moving up, even though we've hit the VWAP for this particular session on our 5. This is a 3-minute. Yep. So many would have had a target from this green one there, sort of been in and out. But other players with the Heikin Ashi candle will just still be long and just scrolling up their stop loss. Stop loss would be around about this second candle now. This one is still forming. So we see if we break the 50 period, which is the dark blue line, and the VWAP, that would be positive to the upside as a trending system. So we've been short here from about 11, and now it's sort of flattened out, found some sort of floor around here at 24,900 or around there, and there here on this 5-minute time frame, trading using your Heikin Ashi candles and the moving average and your VWAP and the ATR to give you some sort of idea of target levels, takes you up. So again, so the here when this triggered long, the Heikin Ashi was there. Sorry, the was about 12, so you'd be looking for like 24 points from here. So 24 would have taken us to sort of 46, which is sort of where the VWAP is. That's 942. See what I'm saying? That's 2 times the ATR of the entry candle. Okay, so that's the rules. Okay, so you can see ATR is 12. Let's do that a bit bigger. There we are. So that's our confirmation candle, a solid candle with no downside wick. The ATR at the time is 12. So 12 times 2 is 24. 24 plus 9 plus the 922 takes us to 24,946, which we've just got to now, which would have been above our both VWAP and the 20 and the 50 period moving average. So it'd be conservative. You would have had your sort of target area around about that VWAP area, which we already did. So we've made 2 times ATR here on the Heikin Ashi setup here on the open, going long from a trend that was down into the open. Okay, see what was happening. We'd had these 3 hours down, having had a move up during the Asian and the European session, and topping out and then down in the second half of the European session. And again, guys that use this strategy on an hourly basis would still be long from 11, 12 o'clock this morning from this roll up, because it's breached the VWAP and it's breached it significantly in the following hour, and it may be targeting the 50-hour moving average or the lows that we got to yesterday in the European close here on the Nasdaq. So again, as ever, guys, it's horses for courses. All of these strategies that I explain to you and show you work. They work well enough to make money with them. It's about applying your risk management, applying your money management, not risking too much, not going hell for leather when you first start with it, and just following the rules and sticking to the rules, really. So anyway, that's off and running, and again, you just leave this now. It's got to your target. These target zones, you might take half of the position off again, or 75% of the position off. If you're a scalping 5-minute trader, you've taken 2 times the ATR. But these are strong candles. These have got stronger into the open. So we're literally just over 10 minutes from the actual cash open sessions. So just pull your stop loss up to here now from entry here. So there we go. We've been whacked. Just as I spoke, it would have taken us out. We'd pulled the stop loss up there. So you've for some reason we've got a massive widening of the delayed widening of the spread there on that Nasdaq. That's all a bit scary, that. But let's have another one. Let's have a look at the Bollinger Band. Back to the 5-minute there. So there again. So it's wiped. So we've had an initial wipeout. Okay. So looks pretty good. Remember, we've been in and out of this, and even if we were still long, that would have certainly taken us out on that 10 minutes in. So something may have happened. So not something might not have happened. It's just what's going on. So we opened positively for us. Stephen Mirren's being interviewed by Bloomberg at the moment as we speak. Remember, he's the big Trump man, big hawk, Professor Stephen Mirren. I don't think neutral rate is zero. That's interesting. So stocks giving back. Nasdaq certainly giving back. Dow less so. Dow's had a right old strong move. So there's the Dow on the 5 minutes. We similar pattern there. See what we're doing. It was 1420 again, where they crossed and long. Target 1, target 2, and out. If you'd kept it in, but they said that the spread is looking quite strong, but the volatility would have taken you out if you'd pulled the stop loss up too close. S&P 500 similar, giving back, not as much as the Nasdaq. Bit of a sticky spread on that one as well, but still there we go. See the Nasdaq crossing here. So if you'd the stochastics topping out, so what we were talking about before, weren't we, with the Nasdaq? Let's have a look, and that's what we were suggesting, wasn't it? It was getting too high. This is what the K and the D line was suggesting. So there we've got a definite cross there back to the downside. So this is looking to go short again, and it may be on this candle here that's forming. So long from 1350 it was, wasn't it? Or 1350 it was, wasn't it, when it first down back here? Yeah, 1350 was the one we started with. Lower fiscal deficits help drive down neutral rates, is seen Professor Mirren with Bloomberg. Let's have a quick look elsewhere, see how the currencies are doing. I'll start from the bottom up for a change. Gold 3886 today. So the move, it cooled a bit this morning. It's a 5 minute time frame, but look at the hourly, strong sort of consolidation at highs basically. So we look at go up another step to the daily. The trend remains, as I say, very set. We've been seeing all week. The 20-day moving average now sits at 37330, so 3,730 for the 20-day moving average. We did have a down day yesterday. It's more than more than two really. We now see pushing new all-time highs again. 3,900 is where the top of the Bollinger Band sits now. 3,904. So what a week we've had here on the gold market. Big move up there on Monday through 3,800 and now eyeing 3,900. So gold, as ever, remains bid. And I'm saying as ever, since this breakout we saw at the end of August, it's just absolutely ran away with it. As I said yesterday in the video, I don't know if you've seen the video that the guys put up this morning, but gold had a really strong run. We are what's the note I made? I remember making a note of it. It's up 47% year to date, 12%, 11%, sorry, in September. A very strong move for gold as well. So 11% gain for September for the gold market. 3,700 breached here on the 22nd. 3,800 breached on the 29th as we ran into the end of the month, and 3,900 being eyed here within the first few trading days of the new quarter and the new month in October. So big bid. When the pop comes, it could be quite significant, but at the moment it's being bought quite strongly, and that's a very strong trend we've seen for the last 6 weeks or so for the gold market. Crypto also went to 120,000 yesterday. Bitcoin, it's back there this morning. It's had a quite strong turnaround in the this is the daily time frame from that sort of floor we found at 109. So the big breach this week was through the 112,000. We talked about this earlier in the week, didn't we? It's my key pivot area we've been talking about for a long time, 112,000, and we haven't looked back since then. Basically, a right old rally Wednesday and Thursday. Cooling a bit today, but we are back at that 120,000. So a new all-time high looks somewhat inevitable with gold. It could come as early as the weekend, and obviously that intraday high we had on the 14th of August took us to 124,000. So still got 4,000 to go there, but certainly crypto had a very, very strong week, a nice bounce and a big rally. And again, the breach so significant of the 112,000 area has added to buyers. And then we took out 117,500, the next resistance area from the middle of September this week, and gone another step higher. So next area is that, as I said, 123,000, 124,000, the new all-time highs for Bitcoin, the leading cryptocurrency, dragging most of the others up with it. Oil, I hadn't talked about oil for a while, but I said a very weak week, as we were suggesting for a while. And as I said, we were on one of my other platforms. We mentioned it earlier this week. We were out the bottom of the channel. The $62 floor has been breached yesterday, Wednesday, and yesterday. We were short earlier in the week. It's a different trading platform that I do oil on because it's on a different. It's traded differently, but the channel we were talking about, the 65 top, $62 bottom we'd seen for all of August and September. The second half of the summer has been breached, and we continue to move lower. So the 58 handle, and 55 handle that we got down to here in late spring is the next support zone. You can see here if we breach this 60 handle, having gone through 62, it takes us down to this zone here at $58 and then $55 to the downside. So it's moving, or it has moved quite rapidly this week with the news from OPEC, the demand and numbers that was coming in their supply story. So, and the inventories as well have all weighed on the oil price this week as it moves to the downside. Forex and the dollar remains sort of mixed, so somewhat, but it was up against the Aussie and the Kiwi. It's been weaker against things like the stronger Swiss franc. This looked like it was again some momentum, having breached the 20-day moving average last week, but since then it's just ran out of puff here against the Swissy, despite what the Swiss central bank had to say. So 79.50 is that blue line there, and it's just sort of bouncing and holding that. I mean, from a positive point of view, from the dollar's point of view, it is holding in the upper half of this Bollinger Band and above the 20-day moving average. But what looked like quite a significant leg, or looked like potentially a double leg move up, has faltered. It's very much faltered this week and gone sideways. So see where we go next week from that. Obviously, the key now becomes obviously the longer this consolidates in this sideways action, the longer we can't breach .80 and hold it. There's 80 there. On an end of day basis, the overall trend which we've seen, I think it's 8-9% move the Swissy has moved against the dollar this year. That could then get reinforced again. So 0.800 is what I'm trying to say. .80 hasn't been breached as it looked like it was going to on this move up towards the end of September. So watch that one sideways. I'll just go through these in order. Yen, again, very mixed picture for dollar yen, and there's Monday there's positive news for one, next day there's positive news for the other. So we move sideways. We looked like we were going back to 150 again before towards the end of September. Had a good second half of September rally, but since then we've topped out at shy of closing over 150. That was again hugely psychological, hugely significant that we didn't get to 150, and we've had a consecutive move lower with the dissenters from the Bank of Japan. With regard to the rate hikes in Japan, and continued, and which has been added to definite what looked like at least 50 basis point cuts from the Fed into year end has moved this from what will look like 150 all the way down to 147, and we went as low as 146.50 this week as well. We've bounced a little bit today and yesterday, but we're still under the 20-day moving average. But as you can see, it's very trendless, and we're just sort of consolidating, chopping around, pivoting around as the mixed messages from both the messages from both central banks get conflicted sometimes from the actual data. So we're just literally rotating through the key 148 area, but see that pivot area there is 148. But we're back below that currently at the end of this week at 147.30. So the pressure is back to the downside for the dollar against the yen, having had a good run. Dollar CAD, on the other hand, has been running the other way. So dollar's been up against the weaker loonie. I've broken out of recent August and September highs for the start of October. So it's a much weaker Canadian dollar. So the US dollar has benefited from that bizarrely. But again, we're into a bit of a key, what was a previous resistance zone here back in the spring, this 139.75 zone, which we couldn't get above here, and then we weakened since then. And although the highs are getting higher here in this channel and the lows are getting higher, we got an uptrend from the turn here in June and July. These lows here, these pivot areas here, we're into this key resistance area here. So if this breaks, this lasted 1, 2, 3, 4, 5, 6, 7 days here at the beginning of May. If we break through this at the beginning of October, there's a lot of potential fresh air above that to take us to the next level, which would take us to 140.50 or 141, and then the next area is up here at 142.70, this zone through here to the upside. So a key area, so it's still looking okay, but we could easily slip back down as well. But big support at the 20-day at 138.50. So this is bullish. I think we were long. Is it dollar CAD we were long, I think, last night? Yeah, dollar CAD we actually finally took a long trade last night on this. So we're long this from last night to the upside. So dollar's up against a weaker loonie. The euro 117.40 this morning. Again, a lot of sideways action. We did look like we were moving lower here at the beginning of August. We've come back from then. We got to 118, 120 was talked about, and still is talked about in many quarters. But again, another one that's sort of sideways action, but biased to the upside. So here, again, just using this strategy as an example, again, that one would have triggered long earlier in the week. I think, in fact, we take a long euro this week? I don't remember. But it's getting stopped each time by the 20-day moving average and the top of the Bollinger Band. It's very narrow, this. So again, it's very, very not trending at all, having had a really good run. And look, again, here in the summer, it looked like 120 was inevitable. It didn't happen. We shook out, but we didn't go under 115 particularly. We went to 114.20 here. 114 was the sort of major support area, but we've recovered 115 quite quickly. And then again, this one, another one that's been pinned through a big round number, this one being 117 for August and September. So we need to break away from that big round number if we're going to move up, but it's literally oscillating around 117. The recent high on an end of day basis took us to 118.60, so 160 pips from the sort of middle of the range, and that was the 16th of September. So let's see where we go at the moment. As far as this week's concerned, it's been relatively weak, under its 20-day moving average for 1, 2, 3, 4, 5, 6, 7 days now, but it has given, we've given back half of this leg down. So if that's if you're looking at that as looks much more exciting now, doesn't it? If that's a leg down, if you like, a Fibonacci leg down, the first fib level of that move is where the 20-day sits there. There's the 38. It's going to drop out in a minute. There's the 38. So to give to move this higher again, you'd want to be back over certainly the 20-day moving average, and then the next resistance sits there at 117.75, 117.80 zone. First resistance, which we haven't been able to break this week, is the 20-day moving average, which is currently 117.50. So 117.50, then 117.75, the 50 fib level of this leg down. These two big down days here we saw on the 24th and the 25th of September. We haven't recovered from that yet, so we could easily have another slip lower here on the daily time frame. But again, really, it's the pivoting through the 117 area. We need to break away from that. And as I say, it looked like we were doing that here towards the middle of last month. Gave it all back the last week and a half of September, and we haven't been able to recover back over. So just watch that one as well as we go into next week. See if we can actually breach and hold the 20-day to the upside. If not, the weakness to this downside becomes perhaps more apparent. We may need to look at 116 as opposed to 117 and 118 to the downside. Aussie 66.18 at the moment. Again, another one, but still more volatility with the Australian dollar, with what's happened with the central banks. Big move up to 67 in the middle of September. Again, gave it a lot of it back again. Another leg, but we've moved. And there's been more significant candle movement, or bodied candles, if you like, on this chart. It's been more volatile. There we are. And more interesting now, we've got the 20-day moving average and the 50 fib of this last leg down, all coalescing around this sort of 66 level. And obviously, it's a big round number, and that's why it's playing a resistance area here, as it was there. This sort of gentle move up. So 66 is the big pivot area. That's why I've marked it in there as the blue line here. And again, fib wise, we've ran to 50 resistance, but we can't break below the 38. So there's the as we go into next week, there's the range 66.18 or wherever that is here, and 65.85 is the bottom of that fib level, which we've been in for the last 3 days. So a break of either of those, we move back down here to test the bottom of the Bollinger Band, and these lows from the 25th, 26th, and 27th at 65.35 for the Aussie. A break over the 20-day moving average, and we start to then test this key important 66.30 area, which is where the 61.8 fib sits, and the recent high that we got in the middle of September, around about this 66.85 area to the upside going into next week on a daily basis for the Aussie. But generally, overall, still biased positively for the Australian dollar against the US dollar as we're sort of drifting up. Shakeout that's being bought back, but as I say, we haven't bought back over 50% of it yet. That's the key green line here, holding us back this week so far. We ran to it on Monday, sorry, on the 30th, the last day of the month, on Tuesday, and we've bounced off it since then. So we could be seeing some more weakness to the downside. But again, just watch that. If that's your party. Sterling, another one that we went long last. Did we go long sterling last night? No, short sterling. In fact, so we were long dollar CAD, short the cable pair last night on that candle there. So the rejection again of the 20-day moving average. But again, it's a bit of a sideways action through the key 135, hugely psychological, the 135 level. We had been down to 132 here in the summer, and then we've edged up. We got to 137 to that mid-September, and then the dollar came back the week and so, didn't it? And then we've bounced back, but again, another one's topped by its 20-day moving average. And that was enough to trigger a short on my system yesterday, even though this setup would have been long. And that is still long. Actually, no. Well, this strategy, the one I talked about yesterday, this would have gone long here on the 26th, taken half its profit out as it got to target 1, but it's weakened yesterday quite significantly. See that? But today's bounced back. So that'd still be open. I said the position we took last night, I put up on the was a short position there from around about here. Last I can't remember what the actual price was, but let's bring in the Discord group. So the short was 134.40. Our target is 134, and a stop loss at 134.84. Long CAD 139.74. Target 140. Stop loss 139.24. For the CAD, they're the two new trades from last night. So where are we now? 134.60. That's gone against us a tad. So we'll see what that is Friday. We'll see what that looks like on the close of the session. Guys, if there's anything you want to have a look at, please let me know. Please stick it in here. I'm just going through the majors. I'll give the Kiwi a miss. My voice is going a wee bit. So let's go back to what we were originally here for, which is trading the open. Let's have a look at the Nasdaq. We were long, then we got took out, didn't we? So there's the daily. Remember, so the daily trend remains very much to the upside. The hourly trend today had been positive, then it's turned around and it's continued to turn around. We caught a long, a brief long in our 5-minute chart, didn't we? Interestingly, here there's the cross of the stochastic. Although we haven't said we hadn't, this wouldn't have triggered a trade here because of the non-touch of the Bollinger Band on the hourly time frame. Going down to our 5-minute time, and that's obviously reversed our long position. So remember, we were long here on the 5-minute time frame. We rallied it to target 1. The volatility of the open at 14.30 took us out because we aggressively pulled up our stop loss, didn't we? But it did, if you just left it, the risk of obviously trading the open is the movement. It can be really exaggerated, but it would have hit target 2 as it hit the outside of the Bollinger Band. There's that squeeze, but it's gone the other way. It's reversed quite significantly. So that's a significant area. So we reverse maybe on something Mirren may have said, but we reversed quite significantly in the last 15 minutes from 24,950. Again, that's why another reason it could have stalled there. Lots of shorts at 24,950 through there, and that looks like that's happened. So this one again. So that's a move. There's this touch of the out. Remember what we said at the time? Touch of the. We were looking to go short. It would have actually gone. Your short would have been confirmed, not there, but actually there. So you would have gone short there at 14.40, and the stop loss would have been up here somewhere. So you might have been taken out because of that. See, the spike in that one is higher than that. If you got the stop loss a bit too close, but it's it's still played out. It's then there's the first touch of the outside of the Bollinger Band. There's the cross of the of the stochastic. You would have got entered there, gone against you initially for 10 minutes, but then very much target 1 and target 2 again, and you're out again. So it's touched the outside of the Bollinger Band, or you're letting it run because you think the trend might run, but as it reversed quite aggressively at open, this might be the new moving down in line. Remember, this is the 5-minute, but in line with our 30-minute trend, which had been down since 11 o'clock, and the hourly trend we just saw a minute ago, down since also the 10-11 o'clock candle. So it's the trend is down for the Nasdaq on the higher time frames, the hourly and the 30-minute time frames, as it will be on the Dow and the S&P. Interestingly, the Dow as just is playing not correlating with the Nasdaq. Perhaps the Nasdaq's out of sync, and we've hit new all-time highs, new intraday all-time highs on the Dow. Just as we literally been speaking, so 46,800 is the new breach of the for the Dow. 46,000. What we call 825 to the upside. So new all-time high for the Dow and the S&P 500. also pushing new all-time highs, but that was before the open, and we got back to it here in this 6,738. So the cash, I say the cash closed yesterday. Cash market closed at 6,715. So derivatives higher, futures were higher. There's the opening hour, and we're down a bit now, but so we're off a little bit, but still certainly up on the S&P as well. So there we go. So looking ahead to next week, it's the first full trading week of October. We've had our PMIs. Obviously, the issue with regard to the data from the United States is obviously the government is in lockdown. It's obviously going to run through the weekend. The blame games continuing. The finger pointing is continuing. Trump is using this obviously as an excuse to flex his muscles a wee bit, and understandably, look at some of the dead wood, as he calls it, in the jobs market within the government, within the federal government. So if we just look at next week, the 5th to the 12th, let's just put the filters in. Start with the medium and high impact events for next week. In fact, let's just start with the high impact events and broaden it out. I'll leave all the countries in. So the high impact events, remember, these are the ones, if you've got a standard account, guys, you're not allowed. There's a 4-minute window around the news event where you don't want to be opening, you're not allowed to open trades. Or if you've got a trade open before the 2 minutes, before the news event, you can close it as the news comes out, but you're not allowed to trade open new positions in the 4-minute window, 2 minutes before the news and 2 minutes after the news. So Trump has a speech. Again, it'll be a press conference. I think it's that time, 17:15. These are GMT times, guys. Here, have a look in there. So Monday. So that was this week. Not that long. A bit familiar. Lots of holidays this weekend. China, South Korea. Thanksgiving, National Day in China. China also. Oh, it's mid autumn festival in China, so we got closed for 4-5 days. The Chinese markets. So nothing of particular note there. Is it high impact events on Monday or Tuesday? I think I've got a training webinar scheduled for Monday and Tuesday. I'll check what's on the schedule. Wednesday sees the RBNZ with an expected 25 basis points rate reduction. Remember, its nearest neighbour, the RBA, held rates at 2.6%. They've been a bit twitchy. Data's looking a bit iffy in New Zealand, so it's expected that they will cut rates, or the economy's sluggish. Look to cut rates again. 2.75 is expected from the RBNZ on Wednesday. Minutes from the FOMC last meeting. It'll be interesting to see what Mirren actually said. I was obviously just getting interviewed now, but what's been documented remember, he was the only one that looked to cut further, and it'd be also interesting to see the other hawks like Michelle Bowman and what she had to say, why she didn't this time. So those minutes out on Wednesday. Also, the 9th, Thursday. Chair Powell's got a registered speech. Obviously, initial job claims may actually come out on Thursday. We may have some resolution by then, but who knows? It goes on forever. And we've got non-farm payroll potentially scheduled for next Friday, given it hasn't come out today. So that's what's been penciled in. Obviously, what gets leaked between now and then, who knows? How many, federal staff get laid off? How many lose their jobs completely? Who knows how nasty this gets? Who knows? The markets so far, every other US government shut down, and there's been a few, particularly under President Trump in his first term, has really shrugged it off. And as we saw that this week, when we got new all-time highs in gold, all-time highs in the stock markets, we've moved ahead again today. Obviously, the week isn't over just yet, but it can't go on forever. I mean, and again, shutdowns tend to mean people aren't getting paid, so there's perhaps money getting sucked out of the economy, but also it means that the government isn't spending money. So they tend to be relatively positive, bizarrely, for stock markets in particular. And then obviously the other big story is this massive AI spend that's continuing on these hugely eye-watering capital numbers to get the massive lift in productivity that AI is promising everyone. It does remind me of 1999, the last big tech bubble, but people saying it's different this time. We'll see. They say that all the time, don't they? It's different types of companies. They're more secure. The banking system is more secure than it was in 1999. But I personally suffered quite a lot of profit disappearing in the spring of 2000. But anyway, that's a story for another day. So anyway, yeah, keep your eyes peeled. Keep your eyes on the calendar. On our Discord group, we'll obviously let you know what's going on. And remember, guys, it's payday today, so those of you that have got your certificates through, do share them. They were up early, so nobody's put any new ones up since this morning. But everyone's payment is different, so do share it if you've got a winning week. So I'm going to wrap up now, and I will see you on Monday. Take care, be safe.